Hi, lovely people. Thank you so much for joining me again. Today, we are carrying on with our taxes series and we're looking at the VAT calculation. And this calculation is to show you, to help you work out, is being VAT registered going to be beneficial for me? So we're going to jump straight into it because I've got a couple of examples to show you today and I don't want this video to take too long. Here's the scenario. You're a business buying goods that carry VAT at standard rate of 20%, which is probably the situation for most of you. You want to make a profit of £1,000 when you sell these goods on in your trade. What's the potential effects of being VAT registered? So let's take a look. In both of the scenarios, we've got a non-VAT registered company, which might be where you're at now, and then you want to look at what will happen if I am VAT registered. So you're purchasing goods for £1,000. They're charging you VAT at standard rate of 20%, which is an increase of £200, which means the total cost to you is £1,200. That's exactly the same for both situations. Your total spend is £1,200 if you're not VAT registered. If you are VAT registered, you tell HMRC, I had to pay extra £200 VAT, and HMRC give you that back, which means that your total spend is actually £1,000. So you've spent less in effect, okay? You want to make £1,000 profit in both situations. Therefore, if you're not VAT registered, your selling price is your purchase price plus your profit margin, which is £2,200. Okay. If you are VAT registered and you want to make £1,000 profit, your selling price is your purchase price plus your profit, which is £2,000. But because you're VAT registered, you now need to add VAT onto your selling price, and 20% of £2,000 is £400, which means your total selling price is £2,400. And this is where you might have a bit of an issue if this makes you no longer competitive in the market or causes a problem for your customers. But we're going to look at that in a little bit later. And also, you now need to pay that £400 over to HMRC at the end of the quarter. But what's the net effect of these transactions? Well, if you're not VAT registered, you're paying out £1,200, you've made a profit of £1,000. Okay, that's standard and simple. If you are VAT registered, you've paid out £1,000. Your net effect of your VAT transactions is £200 that you have to pay to HMRC. They paid you £200, you had to pay them £400, which means the net effect is that you have to pay £200. But your total profit is actually £1,200. And that's because you've in effect spent less on your purchases. That's how that works out. And let's look at it from your customer's perspective. If you're not VAT registered and your customers are VAT registered, they're paying £2,200 for your goods or services. If you're not VAT registered and your customers aren't VAT registered, they are also paying £2,200 for your goods and services. There's no change there. If you are VAT registered and your customers are VAT registered, in effect, they're only paying £2,000, because even though you're charging £2,400, they're claiming that £400 back from HMRC as well. So they're like win-win. They're paying less than if you weren't VAT registered. And if you are VAT registered and your customers are not VAT registered, they're paying £2,400. They cannot claim back the VAT. It is more expensive for them. So what you want to do, if this scenario would apply to you and you want to look at, is being VAT registered going to be beneficial to me, is put your own figures in there, put your own purchase prices, the goods that you're buying, what rate of VAT they are, how much it's costing you, what your potential profit margin is, what the profits are that you're making now, and what the net effect of that is. Currently, what are you spending? What's your profit? What's the effect on your customers? If you was to be VAT registered, what would you actually be spending? What would you be reclaiming or paying to HMRC? What would your actual profit be? And what is the effect on your customers? If you're trading mostly with VAT registered customers, being VAT registered yourself is going to be a major benefit to you. It makes you a lot more attractive to them. If your customers are not VAT registered and you're a B2C company, then in general, if your priority is your customers, then staying non-VAT registered is going to be more beneficial to them as well. But if you're looking at profit, then, work it out for yourself. Okay. Example number 2 is for if you're selling zero-rated goods. We're using exactly the same figures that we just looked at before, but this time the goods that you trade in are actually zero-rated. So what you sell carries VAT at 0 rate. And you can look back at the previous video or at the free guide that's available for download to see what types of goods and services would be considered as zero rated. Exactly the same situation, we're purchasing goods for £1,000, they're incurring VAT at 20%, which means our total cost is £1,200. If you're not VAT registered, your total spend is £1,200. You want to make a profit of £1,000, your selling price is £2,200, exactly the same. If you are VAT registered, then once again, you've spent £1,200 and you tell HMRC, hello, I have to spend an extra £200 on VAT, pay me back. They give you back £200, which means your total spend is £1,000. You still want to make a profit, but you only spent £1,000, so your selling price is £2,000, okay? So your selling price is cheaper than in the non-VAT registered situation. Let's take a look at the net effect. If you're not VAT registered, your total spend is £1,200. Your total profit is £1,000. That's it, halas, finish. If you are VAT registered, your total spend is £1,000. You got back £200 from HMRC. Your total profit is still £1,000. So in effect, you've got £1,200 extra. You've spent £1,000 and you've got £1,200 extra, which is a reverse of this situation here. And the effect for your customers is if you're not VAT registered, regardless if they are or not, because it's zero rated, they're going to pay the exact same amount, £2,200. If you are VAT registered and you choose to go down this scenario, they're going to pay £2,000, which means that they're paying less for your goods and services. It's a benefit to them. Alternatively, just to show you the flip side, if you keep your selling price the same as when you're not VAT registered to when you become VAT registered, and you still sell at £2,200, you still spend £1,000, you still get £200 back from HMRC, but now your profit is £1,200. Your profit has increased by £200 and your customers are paying exactly the same as what they were paying before. So either way, if you've got goods that are VATable at 0 rate, you will either increase your profit margin and not affect your customers in terms of selling price at all, or you can keep your profit margin exactly the same, but your customers can benefit by having a cheaper product or service that they're purchasing from you. This is a really good scenario to consider if you're selling zero-rated goods. And the very last example that I want to show you is probably my favorite, and that's for our startup businesses, always trying to support you guys. In this situation, I want you to consider that you're buying goods at standard rate, you've just started, you're incurring high startup costs. This is so typical for pretty much every startup business. And you've only made, in this example, £500 in sales so far. Change the figures a little bit just so you can see the net effect in a little bit more detail. In this case, you've bought £3,000 worth of goods. So if you're buying stock or inventory or whatever the case may be, and they're charging you VAT standard rate £600. Your total spend, if you're not VAT registered, is £3,600, and say you've made £500 worth of sales. Fantastic. If you are VAT registered, you've paid £3,600. You've told HMRC, they've paid you back £600, which means that you've in total spent £3,000. You then made sales of £500, but because you're VAT registered, you have to add on VAT, which is £100. 20% of £500 is £100, which means your total income is £600, but you have to pay £100 to HMRC. Okay, so that's the little niggly bit there. The net effect is, if you're not VAT registered, you've spent £3,600, you've bought in £500, which means your bank balance is minus £3,100. Talking about today, your bank balance would be minus £3,100 in this scenario. If you was VAT registered, your total actual spend is £3,000. Your VAT refund is £500. The net effect of your VAT payments is you get a refund of £500, and your bank balance is minus £2,500. Now, in terms of cash flow, this situation is pretty bad. Being VAT registered is still pretty bad because you're a startup. So in this situation, you're going to be spending more money, but it's not as bad. Okay, when you think about it, if you've spent £3,000 and if you've spent £3,600 of your account, you've made £500 in sales, okay, you're in this actual situation, but after 3 months, when you get that check from HMRC, they're paying you an extra 500 quid. So you're in a better situation in terms of cash flow. And that's why I think being registered for VAT when you're a startup there are some benefits there. And then what happens later on is when your situation improves and you start making a lot more sales and you're now bringing in more than you're spending, you're no longer a startup, you're now an SME, deregister for VAT so that you're not having to pay out to HMRC 20% like every quarter. So you just, if you're KBS client, we deregister you automatically. We keep an eye on those figures and hey presto, sorted for you. So those are the three key examples that I wanted to share with you guys that you may not have seen before. I think it's really important, particularly for the standard exercises, to just go through, use this same format, the same model, because it's really, really simple, and put your own figures in there. Think about what VAT rate would be applicable to you, what VAT rate you're paying on your goods and services that you're purchasing in order to get your business running, and what you potentially may be charging, and look at the effect that will be on your selling price. So what that might, how that might impact your customers, and if your customers are VAT registered or not VAT registered. I'm going to have this in the free download guide with proper explanation for you guys, so taking a little bit more time than what I'm taking here today, and how to work out these calculations for yourself. So if you do want to give it a go, please go ahead and download that and take a look at it for yourself. So I wish you the best of luck. Please remember to join me next time. Thank you so much. Bye.